Jane Street.
Jane Street.
Jane Street.
Jane Street?
For manipulating Indian markets.
The regulator is barring Jane Street from access to its local securities market, SEBI.
Jane Street, a name that Indian options traders would have definitely heard over the last 1 year because of their alleged manipulations in the Indian options market. But now things have changed because SEBI has come out with a 100-page report clearly saying how Jane Street used cash options and futures market to make profits to the tune of 36,000 crores. And out of this, SEBI has pointed out more than 4,800 crores is unlawful profits. That means they gain these profits by engaging in market manipulation. So, these news are clear, these headlines are very, very clear. You would have seen this across all the different platforms. But in this video, I want to give you value. I want to make sure that you understand what are the two strategies that Jane Street ran in the Indian derivatives market to make all of this profits. So that's what we are going to discuss today. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So before understanding the two strategies, it is very important for you to look at the profit and loss summary of Jane Street over the time frame. What is the time frame that SEBI has selected here? January 1st, 2023. Yes, 2023 to March 31st, 2025. And out of this total trading time frame, Jane Street across four of its accounts made total profits of 36,502 crores. But what did I want you to notice here? They made a profit of 43,289 crores in the index option segment. But why is it not matching 36,000 crores here but 43,000 crores here? So why is it not matching? It is because they made losses elsewhere. Where did they make losses? In the stock futures segment, you can see that they made a loss of 7,208 crores. Another 288 crores in the cash segment and another loss of 190 crores in the index futures segment. Now I'll tell you why this is super important when we get to the first strategy that they use to manipulate the market and gain profits. So SEBI has given a name to the first strategy. We don't have to do it here. The first strategy is called as intraday index manipulation strategy. This is what SEBI has named it. And they've looked at January 17th, 2024 as the example here. So I'll quickly tell you how this strategy works. So between the morning first half of the day, between 9:15 a.m. and 11:46 a.m., Jane Street purchased Bank Nifty stocks. Bank Nifty stocks and the futures equivalents in all of these stocks. How much did they buy it for? 4,370 crores was pumped into all of these stocks in the first 2.5 hours of the market being open. And at the same time, what would happen? Generally, if someone buys 4,000 crores worth of stocks, the stocks will start moving up. And when these stocks started moving up, what did Jane Street do? At the top, they bought huge quantities of put options in Bank Nifty and sold huge quantities of call options in Nifty. This means that they were heavily bearish in the market. And for what tune? They made 7.5 times the size of the cash position. Okay, so the option segment, they took huge positions. If it was 4,000 crores here, they took more than 30,000 crores worth of positions in the option segment and they were bearish. So what did they do after this? They pumped up all the stocks, they took a bearish trade and then they will start dumping all of these stocks. So in the patch 2, which is a reversal patch from 11:49 a.m. to 3:30 p.m., they'll aggressively sell all of the morning positions that they took in the cash segment. Bank Nifty will come down and the options trade will start to give them huge profits. You see what is happening here, right? The cash segment was just a front, was just a method for them to manipulate the index prices. So even if Jane Street took losses there, they are okay. And that is why in the P&L table, you saw huge losses in the cash segment, in the future segment and whatnot. And all the profits are in the index option segment. And this buying happened across all of the Bank Nifty stocks. So you can see here in this very descriptive table, SEBI has said that across HDFC, ICICI, Axis, huge buying happened between 9:15 a.m. to 11:20 a.m. And in some of these stocks, the positions were even up to 25% of the market-wide traded value. That means Jane Street alone on that day contributed 25% of the entire traded value in some of these stocks. You see the impact, you see the magnitude of all of these, don't you? I'll quickly show you this day in the TradingView chart also. So in the beginning of the day, they took huge positions which pushed up Bank Nifty from the opening price of 47,000 to 47,600. A gap or a move of more than 1.26% or 600 points in the first 30 minutes. Yes, these are all 30-minute candles. From there, towards the end of the day, Bank Nifty crashed more than 1,400 points. 3% is how much the fall was seen. You can imagine the profits that were made. On a single day, on the single day that SEBI analyzed, it was an expiry day, they made a profit of 730 crore rupees. I know all these might just seem as numbers, but just try to imagine what this amount is. 730 crore rupees profit in a single day. That is the first strategy, the intraday index manipulation strategy by Jane Street here. So what do? They buy cash and futures segment. They buy all of the Bank Nifty stocks. They push the price up. At the top, they start buying put options and they start selling call options and take a bearish trade in the option segment, and they dump all of the shares that they bought in the beginning of the day, and they are able to make huge profits in the option segment. Now let's get into the second strategy, which SEBI calls as a extended marking the close strategy. So here also the concepts are very similar. It will be easy for you to understand since you already know the first strategy, but the order of things is slightly different. Let's look at how this extended marking the close strategy works. So between the start of the day, that means from 9:15 AM to 2:30 PM, not much trading activity happens. They observe only low volume, non-directional or passive trading from 9:15 AM in the day to 2:30 PM in the evening. But if you remember, during all of these time frames, there were huge candles someday between 2:30 PM and sometimes even at 3 PM. We called it as a 3 PM candles. So what used to happen here? Between 2:30 PM and 3:30 PM, they would start accumulation and holding of cash equivalent positions in index options. That means between 2:30 and 3:30, they'll start aggressively buying and selling or taking positions in the option segment. And at the same time, they'll start moving all the cash segment stocks. Why? Because they want the options to expire favorably to them. So let's take this example that SEBI has given here for the extended marking the close strategy. It is July 10th of 2024. So July 10th of 2024. So mark the candles here over July 10th, 2024 in the candlestick chart. So you can see in Bank Nifty, the day started somewhat bearish, right? The day started somewhat bearish and huge activity here. Bank Nifty fell more than 300 points. But what did you see in the last 30 to 1 hour of the day, 30 minutes to 1 hour? The market barely moved. Let's say you and I, we believe that 52,300 is where Bank Nifty will close the day. What will we do? We'll sell a call option there, we'll sell a put option there, what is known as a straddle strategy, and we'll just hold it. And if Bank Nifty expires at that position, we'll be making huge profits. But what you and I don't do is then manipulate the Bank Nifty index to reach the level that we want. And that is what Jane Street has done. They took positions in the option segment, then they manipulated the cash segment or the index to reach the position that they wanted to reach. So all options traders would have understood this pain. Sometimes you will be seeing huge moves at 2:30 PM, at 3 PM because Jane Street wanted these prices to reach their levels. And sometimes you would see no movement if prices were already favorable to them. They'll keep manipulating the index in such a way that they'll buy and sell between all of their companies in such a way that huge volumes were created. But at the end of the day, the price of the index ended exactly where they wanted to. So these are the two strategies that Jane Street used to manipulate and make unlawful gains from the Indian market. That is not me saying it, that is SEBI saying it in their 100-page report. Now you'll be seeing all sorts of drama across the deals. You'll be seeing a lot of headlines. Then you'll start seeing Jane Street's response to SEBI, and maybe they'll even work out a deal. But what I want you to understand is that 4,800 crores is the amount that SEBI found out of the total profits of 34,000 crores. Now, how much money is still left that they have not investigated? SEBI investigated only 18 expiry days over this last 2.5 years. What about all the other days? What about all the losses that retailers made across this time frame? I'm sure no action will be taken against all of that. And that is where I want to highlight to you. You have to understand, be humble in the market. There is going to be a lot of big fish in the sea. They'll be having strategies like this, or even maybe more advanced strategies in their pocket for them to manipulate the market. You can think of them as a land mafia here. They're the options or the derivatives mafia in the stock market. Similarly, a lot more players would also be there. If you have understood how both of these strategies work and you don't have to go through the 100-page report, I hope I've given some value to you through this video. So make sure you hit the like button if you liked it, share it with all of your friends who have made or lost money in the option segment, and make sure you subscribe to the Market Feed channel for more such content. This is Ajay Ajith signing off. See you all again with another video soon. Bye bye.